What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and today we're going to talk a little bit about geopolitics and energy prices and how you can profit from a lot of these moves. So one of the things that I've been watching for a couple weeks now has been the escalation in geopolitical tensions between the Russia and Ukraine. And man, this seems to be happening, once every 2 years or something along those lines. And over the weekend, we did see some good news. And I'm pretty sure this is good news. Russia is pulling back 10,000 troops away from the Ukrainian border. And when this happens, my question is always, what did Russia get out of this? Because there's most likely, we see the news on the screen and then we say, what are the negotiations and the back alley dealings and things like that are going on that would preclude this, that would cause a de-escalation. And so my best guess is that it's going to have something to do with this, Nord Stream 2 and the ability to export energy into the Eurozone market. Now, whether that's a good idea or not is not my call, right? Whether or not the Eurozone should do this or should not. It would bring on supply, though. And I think that could help with the current energy crisis in the Eurozone right now. And there is one. If you haven't been paying attention, here is a chart of, what is this? The UK natural gas futures market. And we were right around here in November of last year. And we traded up to about 400 all the way up to 460 right here. And it's since pulled back because natural gas tends to be very volatile on its own. It's 500% higher. Okay, so energy costs are 5x from that. And it's not just natural gas, it's coal, it's renewables. The price per kilowatt hour in a lot of developed Western European nations are through the roof right now. So what I like to do with these kinds of narratives is when I see people's pain, I'm looking for ways to profit. Now, I don't chase headlines. I don't trade based off of headlines or anything like that, but they do give me a clue saying, hey, here's something we should watch. So I want to show you, this is CL futures. And this is not European energy. This is domestic energy. And so the question for us is, will the inflationary things that we've been seeing in energy markets, in China coal futures were going absolutely bonkers a month or two ago. In China, the Eurozone, and everywhere else, will it start to significantly affect the United States? And this is the easiest way for me to look. This is crude oil futures that are delivered in Cushing, Oklahoma. Okay. And we have seen large institutional footprints in our trading roadmap. All right, so we don't look at headlines, we look at our roadmap to dictate entries and to say, are these institutions, are the big money players really aggressively buying the dip? Are they very responsive into price levels? Are they accepting higher prices, or are we going to roll over and things like that? And right now it's looking very bullish. We've got this price support and this price support and a pretty significant LVN, a low volume node right here. And you also have this blue line, which is the anchored volume weighted average price from the November 2020 lows. And so when crude had that really nasty crash to the downside, it flushed out it flushed out a lot of leveraged players. And then we saw this kill candle right here, where we saw this knife underneath that VWAP into price support, into the LVN, and we saw aggressive buying into that. So that's key. The key point number one. We see this rally right here, and then we see another rug pull. All right, so this candle right here. Now that lines up with this price support right here and right here, as well as a key low volume node and volume shelf right into that. That dip was aggressively bought. Okay, so we have two pieces of evidence saying there are very aggressive, responsive buyers into any kind of dip. And that's a bull market, right? That's still, that current evidence potentially can lead to higher prices. Now, we've got this massive level coming up, and it's going to be $75 a barrel. Price resistance here, price resistance here. We've also got this volume shelf and then a secondary volume shelf right here. So I would love to see how crude trades into this. There's also, it's not shown right here, but there's this anchored VWAP coming into play, and it's going to look something like this. And price will probably catch up into it as we come into all of those levels at the same time. Huge level, pivotal level. I'm not saying it's going up or down. What I'm saying here is you need to watch the price response as we head into it. If we come into it and then, maybe we sell off and the dips are shallow, odds are we're going to break out. Or if prices are accepted and we just start to trade sideways just underneath 75, building out volume into that, that means buyers are willing to pay at higher prices, right? If that happens, and then if we see a breakout above 75 or retest to 75 from the other side, that's how you get the next leg in energy and commodities and everything else. Now, if it holds 75, has a hard rejection, aggressive sellers coming up, maybe it comes back into this high volume node right here, and then it tries to bounce and then rolls over, that's going to be evidence that we could start seeing a longer term top forming. All right. We could make the case and say, hey, crude oil has been experiencing a lot of distribution from about right here. You could make the case for some kind of a head and shoulders top or some other traditional technical pattern. But the main thing here is to watch into $75 a barrel and see how price responds into that. Okay. Now, at PVA, we have already positioned into an energy stock, and it's a very similar look as to what crude oil has been doing. Okay. So we've got this boop level right here. You can see it's a very technical term right here. And this stock had a massive rally at the beginning of the fall, and then it got crushed. And it came back into this anchored VWAP from the November 2020 lows, and it held. That level also coincided with a key low volume node right here, and it has since bounced. All right, my first target is right here. And if we get that, that's about a 40 to 50% gain on the stock. If we come back and we retest the highs, that's going to be a 100% gain on the stock. And that, if you add some call options to it, add a little leverage, add a little convexity, all of a sudden you're looking at massive gains, right? And that, again, we're not looking at the headlines, we're looking at our roadmap and saying this is the best place to put on risk on this stock to get the best prices and the highest potential upside. If you would like to learn more about our roadmap and get access to our portfolio and trade alerts and everything else, there is a free webinar that I would encourage you to attend where I go through everything involved in our process and what we do at PVA. At the end of that webinar, you get the special opportunity to join me and become a client. I highly encourage you to do so. That's all I got for today. Thanks so much for watching, and I'll see you on the other side. Take care.